rates, stock, and what to look out for in 26. So welcome, 2026 just kicked off. We're here in Sydney buying property. What are my thoughts on rates? I'm getting asked that a lot. My only answer to that is I actually will agree with the media and the banks for the most part anyway. On this one, usually I don't. However, most are saying it's going to go up a little bit, going to go down a little bit, or stay the same. And I agree. Over the year, I don't think there's going to be anything dramatic happening to those rates. I know that's the general consensus out there. Something might happen, Venezuela might kick off, maybe Ukraine again, but overall those rates are going to be there and they're still low. I know they feel high from what they were previously back in COVID times, but overall these rates are low. What's that going to mean from a stock standpoint? Well, it's going to flow into it because people who haven't purchased for the last 2 years have been waiting for the perfect storm, as in they want to have perfect storm, but by that I mean they're going to want to have some confidence. Stability in rates provides that confidence. As people, particularly families, are going to look to make a move this year. So we're going to see more people and more buyers come to the market, but we're also going to see more property. Property's been down, listings been down 7% last year on year in Sydney. I expect that to definitely go up in 2026. So we're going to see more stock. You're also going to see stock of all variations come through. So some really good ones that are, we're classified as tier A. It's the right area of the suburb. There's nothing wrong with it. It's really blue chip. Maybe it's having some renovation done. And we're going to see all the way down the other end of property that needs some work. Typically, we see lots of sales. You see both properties, tier A or all sets, tier A, tier B, and tier C. On a really hot market, the tier C sell because there's FOMO. Tier A stuff selling, can't get in. Tier B's going, so people buy the tier C. You've got to be really wary of doing that. So that floats to my third point. The third point of what to look out for this year is the golden goose laying the egg, which is having opportunities with agents. They share you a pre-market property or a listing. That's probably that they were going to list, let's say next week or the week after, but they're giving you early access, or off market. These ones might be more, divorce scenarios or maybe discreet neighbours. People don't want their neighbours to know they're selling. Either way, be careful about some of these, not all, but some of these scenarios. It can be too good to be true. Make sure you do your due diligence, get your own building report, get your own strata report completed, and make sure you've got enough facts there you can feel really confident with those purchases. So those are my 3 things for January 2026 I want you to be mindful of, or that I can commentate on, feel some confidence. Good luck this year if you're buying or selling, or if you're doing nothing, you're an investor. I expect the yield from a rent standpoint to also go up. Anyway, thanks for dropping by.